Hello, I'm Casey Conway, Chief Economist with the CCIM Institute and Director of Research at the Alabama Center for Real Estate at the University of Alabama. With the extraordinary events that we've been going through here with the coronavirus outbreak, I'm here to share a few perspectives today on some of the intervention and things that are unfolding that may be helpful to you in your real estate business or advising clients or just weathering it through from a commercial real estate standpoint. So let me start with really what's happened from a number of the intervention activities, starting with last Friday and running through really yesterday. They were quite extraordinary. So last Friday, the Federal Reserve had an unprecedented intervention with three moves, and in which they announced or led with, look, if we have to put $1 trillion a day into the market into buying different facilities and intervention through the end of March, that's what we'll do. That's absolutely extraordinary when you consider that the Fed's balance sheet we worried about when it was at $4.5 trillion post the financial crisis. So let's look at a couple of the others that happened really advancing over the weekend and through Monday. So one of the most noteworthy ones was the FDIC's announcement about loan modifications. So they issued a letter to the banks encouraging them, one, to work with customers on reasonable loan modifications. And they had a couple of other aspects of that loan modification that are incredibly important. These are the two takeaways to take from that letter. Number one, they said that you can only engage in a loan modification if your loan is current and has been paid as agreed up to this point. So please don't default on your mortgage and your loan on your commercial real estate here in March. Find a way to get that March payment done and then work through a loan modification. If you're delinquent, you're ineligible for a loan modification according to the FDIC's loan modification guidance. Number two, as I said, when you modify the loan, make sure you don't do it in a manner that triggers it to be classified as what's known as a TDR, a troubled debt restructure. And that's kind of a complicated banking and accounting term, but basically what it means is don't do too much and don't do it in a way where whether you're benefiting as a borrower more than, say, the bank. So if you're asking for forbearance for 6 months on the payments, as long as you're adding that on to the back end of the loan, so the loan amount really doesn't change or the payments in terms of what you owe doesn't change. So it's kind of technical, but what they advise is have the bank check with their internal credit and accounting people or check with your own accountant on that. But the two big takeaways from the FDIC's loan modification are, one, keep your loan current until you can get it modified or you won't be eligible. And number two, don't do too much where you trigger a TDR restructuring. It creates a whole lot of other problems. Next up was the FHFA, the Federal Housing Finance Authority. And they intervened and provided guidance to particularly multi-family borrowers and single-family borrowers as well, but primarily on multifamily. And they said, if you're a multifamily owner and you have a Freddie, Fannie, or HUD type loan that's under the umbrella of the GSEs, the government-sponsored enterprises, you're eligible for loan forbearance. We'll talk about that term in a minute. Forbearance, not forgiveness, as long as you halt eviction of tenants that can't pay their rent right now. So before you jump and say, wow, I'm not going to have to pay my multifamily mortgage and my tenants aren't going to have to pay their rent, understand what forbearance means versus forgiveness. At the end, when this is all done, you're still going to have those loan payments you missed have to be caught up or put onto the back of the loan. And from the tenant standpoint, you need to understand this is forbearing what you owe right now. It's not forgiving it. So if you're really on the edge and you permanently lost your job, you may be better trying to double up with family at a home and not just forbear rent at this point in time. So understand that key distinction. The third one that came out was quite extraordinary from Fannie Mae that suggested that maybe appraisals were going to be waived. What Fannie Mae said is we recognize that homeowners and multifamily folks may not want their apartment or their dwelling unit, their house inspected right now for an appraisal. And so how can we deal with that? Well, they've had a product known as a desktop appraisal that doesn't require inspection. Now, here's the catch in it. You can use the desktop without inspection, but it's only eligible for purchase transactions or second home purchases where the loan to value does not exceed 85%. If it's a high LTV second home, or it's not a purchase transaction, you're not going to get any relief here. And to be honest with you, it it's some relief and it's somewhat cosmetic, but it's not doing a lot of good. It's not waiving appraisals in there. But I've been encouraging everybody to keep in mind a philosophy or a strategy during this virus. Look up and forward and have what if thinking. So look up and forward at the plethora and the rollout of these interventions. Some of them are very meaningful, and some of them the devil's in the details. Ask the what if thinking. What if I opt for forbearance in my loan, my multifamily loan? And what does that mean down the road in terms of repayment and how long and the complications of tenants that may have to catch up on their rent? So as we move forward with all of these intervention facilities, it's great to see the kind of creative thinking to try to help us through this. It's very greatest generation like behavior, but we have to look up and forward to find them. We have to read in the devil of the details to understand what if type things that we can do. I hope this has been helpful for you. There's lots of resources out there. The CCIM Institute is fully engaged with all kinds of things. Go to ccim.com, and they also have a COVID-19 resource page with all kinds of good information. It's at ccim.com/COVID-19. Be safe and look forward to talking to you again shortly.